The final scenario is a collapse, which I believe is the most probable outcome. This collapse would likely occur due to a combination of wishful thinking, denial, and delay. We would likely stumble into this collapse without realizing it. And the response would likely involve executive orders and possibly even a rise in neo-fascism if social unrest ensues. It's worth noting that there's a significant chance of a collapse in confidence in the US dollar and the entire international monetary system. The international monetary system heavily relies on the US dollar, so if the dollar were to collapse, the entire system would follow suit. This isn't meant to be a provocative statement. Rather, history shows that the international monetary system has collapsed 3 times in the past 100 years in 1914, 1939, and 1971. Therefore, another collapse wouldn't be unprecedented. In the event of such a collapse, it wouldn't be the end of the world. Major trading and financial powers would come together to renegotiate the rules of the game, much like what happened after previous collapses. There are 4 potential scenarios to consider in this context: multiple reserve currencies, SDR's special drawing rights, gold standard, or a collapse followed by something worse. The multiple reserve currency scenario envisions a world where the US dollar's share as an international reserve currency declines below 50%, with other currencies like the euro, Australian dollar, and Canadian dollar gaining prominence. However, this scenario is deemed unstable due to the lack of a central anchor like gold or a dominant currency. SDRs, or special drawing rights, represent another possibility. This is essentially a global currency issued by the IMF International Monetary Fund. While simple in concept, it would require significant policy changes and international cooperation. The IMF has expressed intentions to make SDRs the global reserve currency over a 10-year plan. But there are concerns about transparency and potential biases in allocation. The gold standard, historically used to back paper money, is another option. However, setting up a gold standard requires defining money, determining proper reserve ratios, and deciding which nations participate. Implementing it unilaterally could be detrimental without global consensus. Finally, the collapse scenario could lead to worse outcomes, such as hyperinflation or severe deflation, potentially prompting radical policy responses like executive orders and a shift towards authoritarianism. In summary, while a collapse in the international monetary system is a real possibility, there are various paths that could be taken in response. Each scenario has its challenges and implications, highlighting the complexity of navigating such a crisis.